Welcome back, ladies and gentlemen, on this smashing Saturday for another daily crypto market update. And this is going to be quite a general update. There's not a great deal of news that's broke over the past 24 hours. Of course, the generality of this update is really going to be talking about where the kind of stock market is, where the cryptocurrency market is, and where it's heading, and perhaps offering some perspective or alternative perspective in regards to a lot of the fears that are out there. I don't really think based on anything other than uncertainty around Trump's policies. And of course, I'm talking about those recessionary fears. Let's kick things off with a bit of a headline. S&P 500 record 1.3 trillion gain on March the 14th, which was yesterday, 2025. The US stock market experienced its best day of the year, with the S&P 500 gaining over 1.3 trillion in market capitalization. This surge was largely driven by major technology companies like your Mag 7s, which saw significant stock value increases. The market's positive performance was influenced by the absence of new tariff announcements from President Trump, leading to a broad market optimism. And you can see here, the kind of day that we had yesterday. Now, the reason I show this is because people are very quick to highlight the $1 trillion has been wiped out of the S&P 500 or whatever it may be, the US stock market. And actually, that's just the nature of the markets and conditions that we're currently in. The monetary supply, $1 trillion today is not what $1 trillion was back at the start of the 2000s. They're not even equatable. We're now talking about trillions in stimulus, whereas the 2008 bailouts, I think in the US was like 600 billion. So it's just a different beast that we're dealing with. And just like you see those headlines that get people sort of suckered in regards to being fearful of $1 trillion wiped out the US stock market, it swings both ways. And that's the nature of the beast, I guess, that we're dealing with as investors in this kind of monetary regime. And when it comes to the S&P 500, despite all the recessionary fears, I actually haven't seen any sort of indicators that suggest a recession is imminent. And if a recession was imminent and I'd found those indicators, we'd be out of the market, because markets typically won't do well in that context. And if you look at the S&P 500, yes, this has been an interesting pullback. And this pullback, by the way, coincided with our inverse head and shoulders target that we gave back in 2023. But this is really quite a normal pullback that we've suffered quite a few of. I don't even say suffer. This is part of markets. They don't just go up. And ultimately, I think you're going to see that resolve. And this is all very relevant because when it comes to the cryptocurrency space, this is Bitcoin with the S&P. They are... Yes, there are moments, you could say, of kind of uncorrelation, but generally they are very correlated. And it's my belief that this is just a pullback in what is still very much a broader uptrend. You've got to look at where monetary policy is. Monetary policy is still very restrictive. There's an undoing of that to come. Just quickly, this week ahead of us, we'll cover it perhaps a little bit more on Sunday. You do have the Bank of Japan rate decision. You've got the Fed rate decision. They're expected to hold rates. And you've got Bank of England rate decision. The obviously main one being the Fed, and the forward guidance on this could potentially provide a bit of relief for market. And if you see any kind of a dovish tone on this, certainly pre-announcement, I don't think they're going to do any cuts. You'll see continuation for the S&P 500, and that means the markets more broadly. And talking about markets more broadly, this is from Eric Balantunis. The Trump put and the Fed put may not be as reliable as people thought, or even here, but the Vanguard put is as solid as ever. This year, these wealth cretin have poured 1.5 billion a day into Vanguard ETF. Firms on track for one of the best quarters ever. Navy SEALs level discipline, the smart money. And ultimately, this is the reality of markets. There's kind of that Tina, there's no alternative to markets, if you will, because what are you going to do? Yes, we all know. I always get comments saying, the stock market's overvalued. Cars are overvalued. Everything is overvalued But is it really in the context of the money supply? Because inflation of all kinds is a monetary phenomenon. However, of course, there are microeconomies in that and things that can affect inflation. But generally, inflation is a monetary phenomenon. And Vanguard still putting, if you will. I do think that Fed Trump put is still to come. And this is all ahead of us. And I don't believe, I'm certainly far more optimistic, which I know winds some people up because, of course, you can't have an opposing opinion nowadays. I am a lot more optimistic on Trump's America, economic America. I think oil's going to come down drastically. That should see economic growth, certainly in terms of revenues and things like this. And ultimately, I think the markets have got a great time ahead of them. I think you're looking at a 2017 playbook. Also, looking at the Bitcoin ETFs, this is what it looks like in regards to the amount of Bitcoin that topped at $40 billion and today is at 34 billion. So this is from James Seyfarth. Nice chart of Bitcoin ETF inflows, which are down to 35 billion from the peak of 40 billion, based on 115 billion of AUM. That means more than 95% of investor cash has held strong despite the painful 25% decline. Equals the boomers are showing y'all how it's done, duck. I don't actually perhaps think there's many boomers. I think the boomers are still to come into this sector. I think the vast majority of individuals that partook in BlackRock's ETF were new investors, which is very interesting. And then he says, related, here's a look at how boomers behave in the US stock ETFs. Nothing but inflows through past significant declines, obviously being 2020 and 2022. And so far this year as well, this is not dumb money, retail. These are wealth creators engaging in wealth creation. And this is the great game, ladies and gentlemen, of markets. And you're going to see continuation to all of this. Let's talk a little bit about crypto news. There was a whale. The same 50x pre-Trump strategic reserve announcement, sort of pre-whatever. He's been very remarkably insidery right. He's now betting on Link at an average of $14. And of course, Chainlink's price, let's pull up the Chainlink chart. I'm sure I've got Chainlink chart. Chainlink's one of my biggest holders. Is slightly below $13, but I think Chainlink is, or slightly below $14, but I think Chainlink is prime, just like the rest of the altcoin market. Also with Bitcoin, it truly isn't a bad picture. This is still an uptrend in my opinion. You're supporting in and around the 30 weekly moving average. We've got lots of technical targets that sees that higher price action. But this whale's now betting on ETH. A little bit of interesting news. Let's talk quickly about real world assets, because it's just hit a new record of $4.2 billion. Now, the majority of this, of course, is in money market funds, essentially debt instruments, US treasuries, and they're going to use stable coins. They're going to use the tokenization of treasuries to back stable coins to essentially enable this new dollar, or it's not a new dollar system, but a continuation, an evolution of it. And we're talking hundreds of trillions of dollars. It's very important to focus on who's actually doing the majority of this. Still, the majority is tokenized on Ethereum. And then Stellar Lumen's another big position of mine. And recap on what Brian Steele had to say about all of this, obviously after the Genius Act was passed.
I believe that stablecoins in particular give us a real opportunity to maintain dollar dominance across the globe. We've talked a little bit about use cases, and as a policymaker in general, I might not be concerned about the way that someone in Mexico, Panama, Peru, Nigeria, or another location is engaged in transactions. But what we actually see is when Stripe has a neobank in Mexico, or Bridge is used to distribute payments to workers across Latin America, that actually strengthens the US dollar. Would you agree? Can you comment on that briefly?
Yes, I think it strengthens the U.S. in two ways. One, many of the companies engaged in the activity you're describing are themselves American businesses, and so they become stronger. But secondly, and I think this is what your question is getting at, it increases dollar demand, increases the demand for U.S. treasuries, and it in turn lowers U.S. borrowing costs.
You want to be paying a lot of attention to what cryptos are enabling, this new finance, if you will, the tokenization of assets. Certainly treasuries and the actual monetary system, they're going to do very well and be allowed to do very well. And this generally really was a general update. It's my opinion that the markets really are not in a bad position whatsoever. And actually, you're going to see continuation. And actually, the same people that have shown up time and time again, I was looking at, I'll share something that I shared with my patrons. MicroStrategy. I'm not the biggest fan of Michael Saylor. I think he's a bit of a ding-dong. But I think you've got a falling wedge here. And actually, there could be some news next week, certainly in regards to forward guidance on the Fed, that sees this continuation for markets broadly. Guys, I'm going to love and leave you. This is a bit more of a chilled out one. It's Saturday. Enjoy your weekends. I'm going to love and leave you. Have a fantastic weekend, and I'll see you in tomorrow's Daily Market Update.